There is a huge amount of news flow this morning, Mark, but let's start by looking ahead to one of the big data points of the day. We're going to be looking at inflation in the form of PPI. Now, you do think this is a data point that matters. Give us what you're watching for.
Yeah, good morning, Anna. Normally PPI gets released after CPI and largely gets dismissed. CPI is the more important component, and since PPI comes after it, it's kind of, well, we've already got the bigger signal. But this is one of the few times a year that PPI comes out ahead of CPI. And as some work from Brent Donnelly by Spectrum Markets has highlighted, if you have misses in the PPI, both on the core and the headline in one direction, that does have a generally statistically significant signal on where the CPI will miss. So we do need to pay attention to PPI today, because that'll give us a possible directional signal for CPI. That is the big data point we're waiting for to Fed next week. All that said, I think I'm someone who thinks that the inflation risk is being underestimated. I think that's going to be a big theme over the next year. That said, I do think that we'll move beyond the CPI and PPI data points quite quickly because the Fed is really the decider. And I don't think we can trade any inflation theme till after the Fed. So I think they'll only provide a short-term 24-hour window shock. And then we'll go back into focusing the fact that this Fed meeting next week will be dovish. That's supporting stocks, supporting bonds.
Mark, we've got futures racing ahead here in Europe this morning. Do you not think that the Russian drone incursion into Poland is going to weigh on sentiment at all this morning?
It was a really weird one, Lizzy, because we got a lot of chatter about that on social media. We're kind of keeping an eye. It took a bit of time to kind of get official confirmation of what was going on. But even then, there's been very little reaction there. Now, there was meant to be a big military exercise at the end of this week in Belarus and combined with Russia, which is why Poland was already expected to be closing its border. I don't know whether it's an advance wave of that. But this is a story that's so far been dismissed. We're keeping an eye on it, but it's not really driving markets at the moment. Yes, the news flow in Europe and geopolitical side seems very negative, but the backdrop at the moment is still relatively supportive for stocks. We've had positive earnings, and again, I reiterate, we've got that dovish Fed coming up next week, which is the really big anchor at the moment for both stocks and bonds.
Mark, what happens if stocks go down in America? And I'm not talking about kind of a 2-week blip that allows people to buy the dip. What happens if stocks go down properly? And is that something that is in any way feasible? Is it allowable that stocks go down at this point? If you're running an administration in Washington, can you afford to see stocks go down?
It's a great question. I think that the supposed administration put on the stock market is a lot farther away than people think. I think we both saw this in the first administration under Donald Trump. The supposed Trump put wasn't pulled until stock market had fallen almost 20%. And again, we saw a version of it in April. So I think from the administration point of view, sure, if there's a big drawdown in the stock market, they will react. But I don't think they'll be quite as sensitive or as short-term as people think. It'll require a very large drawdown.